Good morning, everybody. Welcome back to Crypto Warehouse. Today is the 4th of April. It is 11 a.m. Central European Time, 10 a.m. in the UK, and a lot later, I'm sure, wherever you are. Thank you for joining me yet again for another daily stream. Remember, if you are new here, smash the like button, smash the subscribe button, give us a follow, whatever buttons you have to keep in touch with us. Press them. Remember as well, this is a two-way stream. If you are out there, if you have nobody to talk to about crypto, send us a message. We will get back to you. A few shout outs this morning again to Tariq is in chat, Mags, Hidden Agendas, Kishan, welcome to you all. Thank you for tuning in yet again. We have one of those inflection points today that we're going to go over. Where is Bitcoin going to go? Are we going to go back to 70,000? Are we going to fall to 60,000? The crowd is split. So we're going to go over that today. We've got the $500,000 Bitcoin target. We've got Ethena. Now, Ethena is a new project in terms of its coin, not in terms of its product. We're going to go over whether that's going to be a good investment or not. Now, in my opinion, I've already made a video about this, so I know a lot about the coin. I am not touching it with a barge pole. I'm going to go through why. I'm also going to go through why it might not be a bad idea for you to look at it. We're going to look at the AI problem. Yeah, that's the problem with the project. We put $1,000 into some coins and staked them against putting $1,000 into the S&P and earning a yield on the dividend, or a dividend yield. We're then going to look at 1 billion people in crypto by 2025. And then my final thought today, I had a message from an OG, one of the very first Crypto Warehouse followers, and we're going to go through the email. We're not going to read out the name or the numbers. We're going to go through the concepts of it. And the reason I'm going to do it is because there is an interesting way to look at staking your coins. So we're going to go through that as well. Now, bottom right-hand corner, I'm still sticking to my $74,000 target. We're going to hit that sooner rather than later. Bottom left-hand corner, we gained almost 1,000 followers yesterday in one day. So we're at 116,000 followers. The target is 200,000 followers by the end of the year. I think we could do it. But to help, all you've got to do is give us a follow. Remember, it doesn't cost you a penny. And the theme of today is $500,000 Bitcoin. You might have all the noise around you, people telling you are going to $42,000 and $12,000 and $1,000 in Bitcoin. I'm telling you to look at the long game. The long game is, at some point in the future, Bitcoin is going to hit $500,000. It might hit $1 million. It might hit $10 million. But it's certainly not going to go to zero. So I said it yesterday, when the market's correct, the news is full of FUD. When the markets go up, the news is full of moon boy numbers. It's just one of those things. People like to feed off the positive or negative energy, just like in Monsters Inc. Anyway, let's get back to the show and go through the markets. Now, some red envelopes have been dropped, so it's making it very difficult for me to read any comments from anybody. Ronald, good morning. Let's go then. So, where are we with Bitcoin? Well, we are at 66,300. Brogan, was in a long from 65,800, I think. So I think he's still in the long. He might be in the short. I'm not sure. I don't need to check with him. But Bitcoin's over 66,000. Ethereum is over 3,300. Both are down exactly 0.5% in the last 24 hours. The market cap is up, still $2.5 trillion. Volume has fallen below 100 billion. Normally the case after we've had an awful lot of chop, we do see the volume drop. It's a little bit like an aftershock where we've had 150, 160 billion dollars worth of trading. That's now fallen below 100 billion. There's reasons for that, which we'll go on to. Bitcoin dominance still over 52%. ETH dominance still 16% and not really moving. So let's have a look at what is up and what is down today. So Bitcoin SV and Bitcoin Cash, neither of those I like. Ethereum Classic is also up. What's what's with these dead side chains? Why are they up? Bitenza is up. Monero is up. Monero recently had an awful lot of bad press. It's a privacy coin that's slowly but surely being removed from centralized exchanges at the behest of local governments. Places like Turkey and France and Italy are banning privacy tokens. In my opinion, not financial advice, I wouldn't go near privacy tokens simply because over a period of the next 5 or 10 years, it's going to be very difficult to cash them out. So be careful with them. eCash is up a touch, Chili's is up, and Ethena is up 3.7%. So they're the gainers. What's at the other end? Core, again, I wouldn't worry about this. Profit taking. We did say on the stream when we covered Core, was it on Monday or Tuesday? I was saying, don't buy these coins at these prices. These prices are too high. And there we go. We're starting to come down again. Jupiter was at $1.70. Was it $1.74? I said, I don't think that's a good price to buy Jupiter. I said, get in at $1.50. And look where we are today, $1.54. Now, I don't have a crystal ball. I can't predict these prices. I can only go off the charts. Jupiter was overbought. It's now retraced. Core, overbought. It's now retraced. It doesn't take a rocket scientist to work it out. Ondo is down. Akash is down. Phantom is down. A few others are down. Pepe is down as well as Flocky. So a few losers today. Nothing too major. Nothing to worry about as far as I can see. Now, the X-Files, these are snippets of information from the world of X, and these aren't really worthy of full discussions. These are just to throw in at the beginning of the show, just to try and catch up and keep. Now, these are the 10 companies which have a value less than that of Bitcoin. So Bitcoin is worth more than Meta and Visa and Tesla and MasterCard. That's how valuable Bitcoin has become. Now, 2, 3, 4, 5, 6, 7, 8 years ago, whatever you want, partly it's because of the ETFs, but we are seeing Bitcoin becoming more and more valuable as the months go by. Completely different asset classes, but it's nice to see them in comparison to those asset classes. So Bitcoin has been doing nothing but slate Bitcoin over the last 3 days because we've had a little bit of a pullback. We've had a little bit of a pullback, Peter, but we've also pumped 20, 30, 40, 50% in the last 3 months. So I wouldn't look at anything he has to say. Now, again, something to bear in mind is we were talking probably about 4 weeks ago about what happens when the ETFs start to sell. I said, well, the price is going to keep going up. Bitcoin's price is going to keep going up until we get to the point of equilibrium, supply and demand. What happens when the ETFs start to sell was a question that I asked. Now, we've seen the Grayscale Trust sell off, and it has done nothing but suppress the price. For the last 2 days, we have seen that outflow from GBTC fall under 100 million for the last 2 days. So that's a positive sign. The Genesis sell-off, so they have GBTC shares, they've been selling them on a regular basis, that has been suppressing the price. Now, Eric, who is more of an expert in ETFs than I am, put some very simple things out there for people to understand. ETFs see outflows. We've talked about this. ARK Invest has gained almost $3 billion in assets in under 3 months. It's only the third biggest. It's an incredible, incredible rise from 0 to 3 billion. We're going to see outflows, maybe not every day, maybe not every week, but we are going to see outflows, and that's going to temper the price of Bitcoin. But it's not going to happen every day. We've had a period of sell-off from Grayscale, which we know about and we know why it's happened. And I think it was $1.2 billion in total, or 2.1 billion. It was in the billions. But they haven't sold on one day because that would really kill the price. They've been selling 200-300 million every few days, and that's what's kind of sucked a little bit of the life out of the ETFs. The 10 team, so the 10 team, these are the 10 ETFs that we have. They are seeing between them net inflows. So that's money coming out of Bitcoin and into the ETFs. It's still going on. Even though we're seeing the odd outflows, the net reduction in Bitcoin is still positive. So even though we've had these days where the ETFs have been selling off, they are not indications of market decline. They are indications of very specific reasons. Now, if we were sitting here and there was no grayscale sell-off and we didn't know what was going on, we could argue the case that we've seen all of that pent-up demand for Bitcoin go. That would be an argument, and I would agree with you. You know, if we suddenly started to see, you know, 300 or 400 Bitcoin a day coming out of the market rather than the 3,000 or 4,000 Bitcoin a day, I'd say, you know what? Yeah, I think the ETFs have now, that initial surge has died off, and now we're at a more even pace. But that's not the case. Grayscale is the reason for a lot of the sell-off. Not Grayscale specifically, but people selling Grayscale. Now, breaking news. Now, this is again another delay tactic by the SEC. The SEC has requested public comment on major Ethereum spot ETFs. Now, just bear in mind, we are on the 4th of April. The 4th of April. The deadline for the approval of these ETFs is, I don't know, the 24th of May, 31st of May, something like that. Why are they asking people at the beginning of April? They need a long time to do these public comments. They need a long time to do these interviews with the ETFs. They need more than the 7 weeks. This is another delay tactic. The same reason that we're seeing the SEC talk to the Ethereum Foundation, they are going to sue the Ethereum Foundation. They're going to accuse it of an illegal securities offering. These are just delay tactics. Don't read this as if they're going to approve the spot Ethereum ETF. This is just a delay tactic. And then finally, I think this is more ETF news. We don't need to really look at this in too much depth. So these are just the inflows and the outflows. Again, if you don't want to watch this element, or you want to study it in more depth, just follow Hodl 15 Capital. Every day they do a breakdown of the trading volume. They do a breakdown of inflows and outflows, and they just calculate it all for you. And you just have to go down the list and see what's coming in and what's going out. So if you look here, you will see that 1,091 Bitcoin were taken off the market yesterday if you exclude Grayscale. And Grayscale, I'll move it up a bit, you can't see because of the bottom of the page, but Grayscale is selling because of Genesis. That's coming to an end. So if you remove that 1,140, we would have 1,091 Bitcoin. Remember, there's only 900 being produced a day. From April the 20th, that falls to 450 every single day. That number, 1,091, stays above 450, there are less and less Bitcoin to buy. Think of long-term prices. If there's more than 450 a day being taken off the market and there's only 450 a day being produced, at some point in the future, there won't be enough Bitcoin unless the price goes up. That's what you have to remember. Bitcoin is a finite asset. 21 million. 1 million has gone forever in Satoshi's wallet. About 3 to 4 million have been lost. That leaves 16 million Bitcoin for the entire planet. Now, there are more than 16 million millionaires. There are probably an awful lot of multimillionaires and billionaires out there that all want their own lump of Bitcoin. Between BlackRock and the other ETFs and MicroStrategy, that's a million and a half Bitcoin gone. Do you see what's going to happen with Bitcoin? Not necessarily the entire market, with Bitcoin. It is a matter of time before we see a blow off top. The question then is this blow off top going to push us up towards $500,000? That's the question. How soon are we going to get to the point of breaking the supply of Bitcoin? We don't know. We don't have a crystal ball, but we can look at other markets, look at their market caps, look at how much money can come into Bitcoin, and we can come to various different prices. I could tell you the top of the market is going to be $100,000. Plan B will tell you it's $580,000 next year. Nobody knows until it happens. Good morning, Tata. Welcome back. So the Bitcoin price has receded from its record high, but history suggests a significant breakout could be next. And again, forget the short-term noise. We know there are people calling for $52,000 and $57,000 Bitcoin. We know there are people calling for $80,000 and $90,000 Bitcoin. We know that. Both of them are probably going to be proved right at some point in the future, but it doesn't necessarily mean it's today or tomorrow. It could happen after the halving. It could happen in June. There could be a black swan. It's all well and good thinking we're never going to go to 52,000. In my opinion, I don't think we're ever going to go below 50,000 ever again. But that doesn't mean we don't sweep the bottom. We'll look at the Bitcoin chart in a minute. But conversely, if we don't have a black swan and we have a white swan, a black swan is an unexpected event that nobody saw coming that is detrimental to the market, like when we had the pandemic. That was a huge black swan. There are white swans. So if Tesla turns around tomorrow and says we're going to buy $2 billion of Bitcoin tomorrow, that's a white swan. And nobody will see that coming. That's why when I see some of these crypto traders being absolutely panned on X, they don't know the future. They're going off the charts. They can't see what's going to happen with Eastern Europe, or they can't see what's going to happen in Taiwan. They can't predict that. They can only go off the charts. So I think it's always unfair to overly criticize them. However, when Gareth Soloway says we're going to $20,000 and the markets are pumping like crazy, I don't know. I'm not going to call him any names for that, but that's just not how I would do it, because I think that's unnecessary. In this instance, we have people predicting tops as well as bottoms. So we've got I could have read you an article today saying we were going to 52,000, but I'm going to go with this one because of the two, 52,000 is more short term. I'm trying to get you to understand that long term, end of next year, we should assess where Bitcoin is, not on a daily basis. We will have steps along the way. That's my $74,000 target. Where do we go after 74,000? Do we go to 84 or 85,000? What happens when we get near $100,000? Are we going to struggle like mad at $95,000, $96,000 because of that psychological effect that $100,000 is going to have? And again, we will go above $100,000 at some point. Will we hold it? All of these things are steps along the way. So this $500,000 target, history doesn't repeat itself, but it rhymes. That's one of my sayings. If you were studying the pattern, you would know what comes after. Where we are right now is very, very bullish. And we may not stop until we hit $500,000 by the end of 2025. Just for the record, I don't believe we're going to hit $500,000 by the end of next year, but I'm going to be wrong. Pointing to the market all-time high breakout and compare it to this year's cycle, Tung noted that sentiment during Bitcoin's most recent bull run is similar to the sentiment during the current pullback. In 2021, we went from 17 all the way to 64 without stopping. This time around, I don't think we have to wait 6 months after the halving event. I think it's going to start sooner. I think we are just being manipulated right now. We got the market makers trying to wipe out leverage, getting ready for this giant breakout. Now, this is true. We have seen the longs being smashed. The price comes down. We see people piling into shorts. We then see short squeezes and the price rips back up. We've seen at least 2 or 3 instances of this in the last 3 weeks alone. And that leverage just gets cleaned out, and it's good for crypto that goes. Don't think that, you shouldn't be longing and shorting Bitcoin and Ethereum if you don't know what you're doing. And if you get stopped out, if you get liquidated, that is on you. It's not on the whale that's done it to you. It's not on the market. That's you. Leverage is high risk. It's a high risk trade. And if you don't know what you're doing, you're going to get wrecked. And that's just how it happens. Even the best traders in the world get wrecked. Crypto Face, Jason Casper, even Crypto Lifer, they get wrecked from time to time. They're not bad traders, but they can't predict the future. So I think we're being manipulated. We're down at 66,000, which is where we are right now. And George thinks we're going to go to 500,000 at the end of next year. I am not going to say that we're not going to go to 500,000. I think there is only maybe a 5% chance that we go to 500,000. I think that more than likely we will hit 6 figures. It's impossible to say whether that 6 figure is 100, 150, 250,000, but we can kind of roughly estimate that we could be 4 times where we are now. So 4 times where we are now would put us at about 250,000. That's a kind of rule of thumb. Whether that plays out this time, I don't know. Maybe it'll be 3 times the price. Maybe it'll be 5 times the price. But the rule of thumb is 4 times the price on the halving is where we get to in the bull run. Could we do that this time around? Probably. I don't know. So I'm not going to predict 500,000. But like I said, if we run out of Bitcoin on exchanges and people refuse to sell, then we could get to that price. If people start selling at 80, 100, 120,000 and that supply just absorbs all the demand for a period of 2 or 3 months, then we're not going to hit 500,000. So where are we? We have a few prices on here. So just to give you an idea, bull market support band is coming in at $53,000. So for me, $53,000 is that price that in the worst case scenario, in the next few weeks, we hit. That is a 20% dip from where we are, just to give you an idea. Now, we've also come down from our $74,000 high to where we are now, which is about roughly 10%. I still think on the daily that we are looking at this kind of movement. Brogan is in complete disagreement with me, which is fine because we're all entitled to our opinions. He thinks we are stuck at a range here. 1 second. He thinks we are stuck there. And he would be right to think that, because if you look at what's happened, we broke down, we found a little bit of support, we broke. Now, we've been doing this for 2 days and we haven't broken it. Now, if you look at what happened here, we couldn't get up here, so what did we do? We came down. So there is an argument that today, because we can't break this, we come down. Where do we come down to? 62, maybe. I think if we're going to do anything, then maybe the bottom of this range would be 62.8, volume area here, price action here. We could come to 62,500. That's the bottom for me at this price. Now, if Grayscale has finished selling today, remember the last 2 days, it's been under 100 million. So if we come down today and they only sell 40 million, where could we go? Well, I think we will go back up. Maybe not in a straight line, like I said yesterday, but I think we're going to go here, back to 69.5. Brogan thinks we're going to go down there. I'm going to leave this on the chart for tomorrow. So that is supposed to be an M for Mike and a B for Brogan. Now, one of us is going to be right because we either go up or we go down. So I think one of these two is going to play out. I think Brogan is predicting we move down and then we come back up like that. So he's not thinking we're going to do this and carry on down. He thinks we're going to come down and then shoot up. So that's what he thinks. And you know what? He could be right. I could be right. I don't know. But for me, the RSI is low. On the daily, the RSI is fairly low. The weekly, I think the RSI is starting to come down, which it is. So if you look at the weekly chart there, the RSI is starting to curve down. Now, it could keep curving down, get down to about here, and then start back up again. But that's on the weekly. So who knows? I think we're going to move up. I think we'll get back to 66.6, 66.7, and then we'll decide. If there's enough volume from the ETFs today, we're going to break it and we're going to move on. Now, I am going to move on because we're going to talk about Athena. But you need to give me 1 second because, yet again, I have forgotten my coffee. So I will be back in 1 second. Okay, I am back with coffee. Your throat doesn't half get dry doing this. Good morning again, Kishan. Welcome back. So, Athena, I made a video about this maybe Friday or Saturday, and I'm not a fan because it is a synthetic stablecoin. Now, for those of you that remember coins such as UST, we had the Luna fiasco. We have, I believe, Cardano are working on a synthetic stablecoin. I'm not a fan, and I never will be a fan, and that's why I'm not going to buy into this project. There was a launch pool, oh sorry, not a launch pool, there was an airdrop of this token at the beginning of the week. I sold it. I'm not interested in it. I don't care where it goes to. I'm not interested in it, but you might be. So I'm going to go over this article. So Athena Labs, their synthetic dollar could grow to become the third largest asset among stablecoins, thanks to its yield, according to Delphi Labs' Jose Maria Macedo. It will become the highest revenue-generating cryptocurrency project on the market. I mean, these names are getting absolutely ridiculous. SUSDE will offer the highest dollar yield in crypto at scale. USDE will become the largest stablecoin outside of USDC, USDT in 2024, and Athena will become the highest revenue-generated project in all of crypto. Now, this is why I will never back this token or project. This is offering you 67% APY. So if you put $100 into this project, 12 months later you would have $167. Where does the money come from? Where is that yield being generated from? Because 67% is roughly 8 to 10 times more than anything else you will get. Now, Ponzi schemes work by taking your deposits and paying them out to other to other people as commission or interest, whatever you want to call it. Now, I am not saying this is a Ponzi scheme. I've looked at it. I've looked at the attestations. I've looked at the charts. It's fine. The way it works is fine. And it uses two different methods of generating this revenue. And they kind of play off against each other. So it does have a revenue model behind it, I understand. And in my video, I made it very clear that in a bull run, this is more than likely going to work. In a bear market, that is where you're going to have a problem. Now, if you look at what happened with Luna, it worked perfectly fine through the bull run, but as soon as the bear market hit, it crashed. I am not saying this is going to crash. I am saying that for my risk profile, I am not touching a dollar that offers me 67% interest. It's ludicrous. In my video, I suggested that the better option would be to offer a lower yield, 15 to 20%, and take that extra yield that it generates and build up a huge treasury. Build up a treasury of Bitcoin. Do what Tether is doing. Tether is making billions of dollars a year. It is buying Bitcoin with some of that treasury. So it's building up its own supply of Bitcoin, which in turn increases the demand on Bitcoin, which in turn increases the price. So it's a self-fulfilling prophecy. I don't believe that you should be paying this amount out. The CEO's bullish predictions follow the launch of the airdrop on April the 2nd with $450 million worth of Athena tokens amongst eligible wallets. The largest airdrop recipient received $2 million worth of tokens. So it's currently got a market cap of 1.9 billion. To flip the third largest, it would have to get to 5.3 billion. It's clearly going to get to 5.3 billion. Clearly. In my view, USDE is the most scalable, fully collateralized stablecoin ever created. It's not fully decentralized, nor can it ever be, but it is nevertheless, it sits at a very interesting point on the trade-off spectrum. Now, I don't know what links I have for this. Oh, okay. We've got the CoinMarketCap link, and I think we've got the chart. So I think I sold my Athena at about 80 cents. I think, something like that. I'm never going to buy this token. I'm never going to hold this token. If you look at the price action of it, it's had its nice spike up, which took it up to $1.30, whatever it was. It's now back at just under $1. Remember, this isn't the stable coin. This is the token of the project. So it's not a stable coin. It's at 98 cents. I don't value it. I think it's a really high risk play. Look at the circulating supply. And we're going to talk about this at the end when I get to the comment or the email that I've been sent. The circulating supply, it's not even 10%. So what that means is there are 9 times as many tokens in the treasury as there are in circulation. So if you hold this token and it's $1 today, and the price, the market cap, everything stays the same, that dollar will become 12 cents by the time this gets to 100% circulating supply. And now what they do, clearly, is they will release these tokens over a number of years, 3, 4, 5, 6, 7, 8 years, whatever it might be, doesn't matter. They're going to release it over a number of years, and they expect the market to absorb those tokens and keep the price high. That's what they expect, and that may very well play out. But for me, I'm not buying anything with a 9.5% circulating supply, irrespective of what the token does. Now, the price action of this token, again, it's already valued at 1.4 billion. Remember, that's not the value of the stablecoin. That's the value of a token associated with the stablecoin. We've had a huge wick up. Let's go down a little bit on the time frame. Had a huge wick up. Now, I drew this chart very briefly yesterday. It's very difficult to do these predictions based on such a short time frame. But we have come down, and we are kind of honouring the fib levels. So this is a good indication for me. What's likely to happen, as happened with a few other coins we've looked at here in the last few weeks, is this coin could do this, or it could do this, and then it will do that, and it will move up to the next fib level, move up to the next price. That's what's likely to happen. There's going to be demand for this coin, and why wouldn't there? It's offering you 67%. So Athena and its stablecoin is offering you 67% yield. I don't trust it. I don't trust it one bit. I think people are going to get burnt. Now, if we're looking for black swans in the next bull run, this could, in the next bear market, sorry, this could be it. Athena could be the Luna of 2026. And I'm not saying it will be. Like I say, I've made a video about it. I've checked it out. I understand how it works. I just don't like the way that they're paying out their yield. I think the yield should be more conservative, because you are going to drag in an awful lot more interest and money than maybe you should. You're going to scale. This is going to get to 5-10 billion in value, the stable coin, that is, in value in the next 3 months, easily. We've got USDC, USDT, then we've got they've got DAI, then we've got True USD, or whatever it's called these days. This is going to become a big stable coin, but it can't possibly pay 67% yield moving forward. I know what the numbers say. Listen, if it's too good to be true, it's too good to be true. So I wouldn't go near this, and I advise everybody. I wouldn't have a clear conscience if I told you about this and said go for it, because what will happen is you could get in for 12 months and it would pay you 67%, and you'd be more than happy with it. But if you stay for that 13th or 14th month and it comes across a problem, what will happen is there'll be massive outflows. They will then stop withdrawals, and the entire thing will collapse like a pack of cards. I'm not going to ever say that this is going to be a good idea, even though it's paying such a high reward. Never going to go near it. I wouldn't trust any cryptocurrency paying me 67%, whether it be a stable coin or not. Now, this is another impending disaster on the horizon. Crypto AI projects would need to buy chips worth their entire market cap to meet their ambitions. Supporting the creator economy with AI-generated video will take more GPUs than all the major tech companies operate. So what are we going to see here? We're going to see the price of Nvidia go higher and higher and higher. If you were investing in the stock market, or if I was going to invest in the stock market, I would go and buy the top 4 GPU chip makers in the world, and I would sit on those stocks for the next 5 years, and then I would sell them, because AI isn't going anywhere. So AI generated videos, AI generated images, they're not going to go anywhere. They will have to ramp up. Now that will involve a cost, and that will hit their profits. But once they've ramped up, which might take a year or two, they will have 3 years, maybe 4 years of just printing money. They'll have a desk in their office, and they'll just press a button every morning, and just 20, 50, $100 bills will just spew out of it constantly, the amount of money they're going to make from this. Because you need GPUs. There's no way around it. You can optimize AI, yes, but you're always going to need GPUs. So the possibility of text-to-video generation excites the crypto market, and AI tokens rose when OpenAI first unveiled a demo of Sora. But to make this mainstream, the company the compute power will be staggering. More server-grade H100 GPUs will be required than NVIDIA produces in a year, or what its largest customers run in their data centers collectively. How many graphic processing units will be required to make text-to-video generation mainstream? Hundreds of thousands, and more than are currently in use by Microsoft, Meta, and Google combined. The first demo of OpenAI text-to-video generator Sora amazed the world, and this renewed interest in AI. Now, we're not going to spend too long talking about this, but the issue is you would need 720,000 high-end H1 GPUs to support TikTok and YouTube alone. Sora requires 10,500 of these for a month to train and can generate about 5 minutes of video per hour per GPU. These numbers just do not add up in terms of how we're going to get there. As the chart demonstrates, training this requires a significant more compute power than GPT-4 or still image generation. Absolutely. With widespread adoption, inference will surpass training in compute usage. This means that as more people and companies start using AI models like Sora to generate videos, the computer power needed to create these videos will become greater. So we're not going to read any more about this. I remember back in the day, people used to leave their computers running just to generate an image for a computer game. Way, way, way back in the day. Now we've got to the stage where you need these GPUs to generate real-time video. Now, there is $30,000 per card. It would take $21.6 billion to bring Sora's dreams of AI generated text to video to life. $21.6 billion if you can physically get the cards. So for me, if I was you, and I'm not you, and this is not financial advice, I would seriously consider investing in chip generators, in chip makers, because that's where the money is going to be in the next 5 years. And I'm not going to read any more about this. So for me, there's a couple of industries where, even though they're valued quite highly, they're going to go even higher. And one of them is Bitcoin miners. Bitcoin miners, I still think, have a big... Imagine that Bitcoin does go to $500,000 next year. That's going to increase the amount of revenue generated by these miners ninefold. So for every dollar they're making today in profits, they'll be making $9 when Bitcoin hits 500,000. Even if Bitcoin goes to 250,000, they'll be making $4.50 for every dollar they're making today. So Bitcoin miners, undervalued. Chip makers, even NVIDIA, which is the fourth biggest company in the world now, undervalued. NVIDIA is going to become the biggest company in the world. It is going to become bigger than Apple and everything else because it makes all the chips. Now, there is a huge problem in that, and that is that they have a monopoly on everything to do with chips. So you would need, in my opinion, another 3 or 4 chip makers to come along, maybe in America, maybe in Europe, because NVIDIA, if there's an earthquake, like we had in Japan 20 years ago, it wipes out the memory, the companies that made memory for computers. It went up 4x overnight. So 1 gig of RAM cost you $20, and suddenly it costs you $80. That's what could happen if NVIDIA has problems with the chips, manufacturing, whatever. That's a black swan right there. That is a black swan right there. Now, let's move on very quickly to an interesting article. So crypto staking rewards are 450% higher than the S&P 500 dividends. While the S&P dips in average dividend payouts, crypto staking rewards continue to surge, with the highest reward returning 84% a year. The average crypto staking reward is now 450%, which I read that bit. So on March the 31st, the index that tracks the 500 largest public companies in the USA recorded its best first quarter growth in 5 years at 10.16%. Its average dividend yield, however, is only 1.35%, the lowest recorded since roughly 2.5 years prior to Q4 2021. Never a good sign when dividends are low and stock prices are high. Never a good sign. Crypto staking, however, is completely at the other end of the scale. Their average is 6%. Now, let's see if it gives you some examples of what we're talking about here. So Algo is currently paying 84%. Cosmos is paying 17%. Filecoin 16%. There's another way to look at this, and we're going to go through that in a minute. However, high-yield staking carries risk since assets are often locked up, meaning that investors may be unable to liquidate, even if the value of the underlying asset were to decline. This is also true. A lot of coins have 5-day, 3-day unlocks. Some coins have 21 or 28-day unlocks. I think Crow is 28 days. I think Luna is 21 days. I think Solana is about 5. Cardano is about 5. So they've got different unlocks, and they're right. But over a period of time, if you know the bull market is going to come to an end in 12 to 18 months' time, you just leave those assets staked for that period of time. And then with a month to go or 2 months to go, maybe October, September, August next year, you just unstake everything. And then you're prepared maybe for the altcoin season that happens after Bitcoin has its run up. So Grayscale, we mentioned this on the stream. Grayscale have created a proof of stake fund which will pay a dividend. It's got Solana in it, it's got DOT, it's got a few others. I would have picked some slightly different tokens than the ones they included, but again, who am I? They are far wiser people than I am. Okay. Right, that's the end of the article. So basically, if you want to invest in the stock market, you're getting 1%, 1.2% dividend yield a year. If you invest into crypto, you're getting 6%. Now, that isn't the end of that conversation. We're going to come back to this conversation at the end for final thoughts. And we're going to go through the questions that were asked by a member of the Crypto Warehouse OGs, we'll call them that. So we're going to come back to this in a minute. But the final article is about crypto reaching 1 billion users next year, according to Raoul Pal. There he is. He never looks happy unless he's got a glass of red wine in his hand. And who can blame him? According to Raoul Pal, we will see a surge past 1 billion in 2025. In 2023, the user base topped 500 million people. That's a 34% increase on the previous year. For comparison, there are more than 5 billion internet users around the world, so we were looking at 1 in 10 people in crypto in 2023. If we go to 1 billion next year, that'll be 1 in 5. So that's a big jump already. Just a few decades ago, there were very few internet users. Prominent venture capitalist Mark Andreessen made a comparison between crypto and the internet all the way back in 2024. As noted by Pal, cryptocurrencies are still being adopted at twice the speed of the internet. Very simple. The internet requires hardware and a telephone line. Crypto doesn't really require that because it's already there. The infrastructure, which is the internet, it started 30 years ago, 25 years ago. We have the hardware. Nearly everybody has mobile phones. Nearly everybody has access to the internet, especially those people that can physically buy crypto. So as long as you have a mobile phone and an internet connection and it's a smartphone, you can get yourself a wallet and you can go and buy crypto. So that's why it's so much faster than the adoption of the internet. The internet required us to change the entire infrastructure of countries. We needed to lay cables. We needed to run wires. We needed to hardwire all people's houses. We needed to sell laptops, mobile phones. Smartphones didn't exist. So there's 100 reasons why crypto adoption is faster than adoption of the internet. 100 reasons. It's worth noting that the internet encompasses various use cases that make it an integral part of everyday life. Cryptocurrencies are truly yet to break into mainstream. Again, we spoke about Chainlink yesterday, and we spoke about RWAs, real-world assets, the next big thing according to BlackRock, which is the tokenization of real-world assets. Now, it's a can of worms, which we're not going to get into now. But the point of the matter is, if you have your DHL or your, what's the other one called, UPS delivery system at the minute, it works, and it works quite well. If you moved DHL, UPS, and every other major carrier, if you moved them onto a blockchain, like Algorand, you move Uber onto Algorand, what you do is you remove friction from the system. And that friction comes about from different paperwork requirements, different languages, different computer systems. If you remove all of that and you make it frictionless and you make it transparent, you bring costs down. And then those businesses, A, will make more money, and B, will pass on those cost savings to you. So by creating a frictionless environment for transactions by using the blockchain benefits the world, and you in particular, a lot more than you going out and buying a meme coin with a cat that wears a hat. That's great fun for now, but long term, we want to remove friction from the system. Look at what crypto is trying to solve. It's trying to solve big problems right now. It's not trying to solve small things. It's trying to solve problems with education, health, the financial system that's 300 or 400 years old. It's trying to solve problems of cross-border payments, KYC, banking, major problems in the world. How long do you think that's going to take? It's not a 2-minute job. It's not going to take them 10 minutes to work out how to fix the banking system in Brazil and connect it to the banking system in Argentina. It takes time. And it's all well and good saying that crypto needs to make a breakthrough into mainstream. It will in time. You can't fix something in 4 years that took 300 years to build. It's just not the way it works. Over time, over the next 10 or 15 years, more blockchain applications will be used. Costs will be reduced. Those costs will either be passed on to you or paid out in dividends, or those companies will make more profits and build themselves into better companies. But that takes a whole lot of time. Cryptocurrencies have so far failed to gain traction as a means of payment, accounting for 0.2% of global e-commerce. Again, if this is the case, why are Visa and MasterCard working with Chainlink to provide on and off ramps across all blockchains? Why were they doing that? Because they know they can bypass banks. Visa and MasterCard can basically remove the banking system from their access to your money. If you have your £10,000 in a bank account, every transaction that comes out of that bank account involves a fee. But that doesn't go to Visa and MasterCard. If you've got £10,000 or dollars worth of money in your crypto wallet, your MetaMask wallet, your Phantom wallet, and Visa and MasterCard give you a card, guess what? The bank doesn't get any money. The transaction on Solana costs a fraction of a cent. So who do you think makes the most money? Visa and MasterCard. So Visa and MasterCard are going to rock up one day and say, there you go, anyone that's got a MetaMask wallet, anyone that's got a Phantom wallet, you can all have a card. And that card doesn't go anywhere near your bank account. Why do you think banks are so scared of you paying money into crypto? Because they know that once that money leaves their account, they are no longer in charge of it, and they work on fractional reserves. It's a whole can of worms for them. So don't listen to half of this nonsense. We are still very early. So the report concluded that cryptocurrencies are actually being adopted at a slower pace compared to the internet. The internet also attracted more money at the peak of its bubble. Don't forget, the two drivers of adoption to to the internet were the word I can't mention for fear of being banned, but that was the main driver. 60 or 75% of all traffic at the time was to those certain types of websites. The next thing that drove adoption were things like eBay and the social sites like Angel Fire and things like that. That drove adoption. Then Facebook came along later on. That drove adoption. Connecting people, emails, and the other words we're not going to talk about. Crypto doesn't have that yet. So give it time, and we are going to see an awful lot more people coming to crypto. Now, the reason we've given ourselves some time at the end is we're going to go through these final thoughts. So as we do, I'm going to bring up the Bitcoin chart. And again, I'm not going to read this person's name out, but I'm going to answer them on the stream because I think they're two very valid questions. So just give me 1 second to bring up Bitcoin, and then we will answer these questions. Come on. What are we at? 66.2, 66.3. 66.3, there we go. Okay, so I'm going to go through the two. There's two parts to the question. So I'm going to read them out so you have both of the questions. Where is it? Okay, so the two questions are to do with staking and lending on Camino. So if we focus on the staking question first, I have an amount of Matic and I'm thinking of buying some more. If I want to stake my Matic, what should I do and how should I use it? I have this amount of Matic. Does it justify staking? So that's the first question. The second one is I am using Camino Finance. I have provided some liquidity. I'm going to stake some USDC on the borrow and lend. Should I put this amount of USDC on the JLP market or the main market? Now, they're the two questions. I'm going to answer the first one because the first one is more applicable to all of you. And then the second one, I will go through a bit quicker. Right, the way to understand staking is you are being given coins. So let's say you have 100 Matic and the staking rewards is 5%. You think to yourself, oh, I'm getting 5 Matic a year dividend. You're not. The emissions of the Matic network is 5%. So think about the buying power of your money. If you put $100 under your mattress and inflation was 2%, you would have $98 at the end of that year in buying power because you've deflated your buying power by 2%. Now, if you put your $100 into a high interest savings account paying you 2%, your $100 at the end of that year would be $102. Inflation is 2%. So your actual buying power stays at $100 because inflation and the savings interest negate. So your $100 stays. With Matic, if you don't stake it, your 100 Matic have the buying power of 95 Matic at the end of that year. So you're losing value by not staking. And I'll give you a really good example. Luna. I've got some Luna. I'm a big fan of the Luna Cosmos ecosystem. I've got some Luna. And Luna's staking APR is 16%, but its emissions are 7%. So if there are 1 million Luna today, in 12 months' time, there'll be 1,070,000 Luna. If you don't stake your Luna, you lose because those emissions are eroding over time the value of the Luna in your pocket. Like I was saying before about Athena, it has a 9.5% circulating supply. So its inflation is going to be 900% over the next 4, 5, 6, 7, 8 years. So your $1 will be worth 12 cents by the time all of those tokens have rolled out, unless you stake it. So by staking your Matic, what you're doing is you're holding on to the value of your Matic. You're keeping the value of your tokens by staking them. That's the first thing. So even if you've got 10 Matic or 50 Matic, you stake it because it holds the value of your Matic. The second thing it does is, of course, it helps validate the network. So it is a reward for you helping to validate the network, but that comes secondary to you holding on to the value of your Matic. The next part of that question is, how should you stake it? Well, you will be on an exchange, I imagine, and your Matic will be on an exchange. Those exchanges that you're watching us on now, they should offer you on-chain staking. So Ethereum, Cardano, Matic, maybe some of the other chains, you can stake them on-chain through the exchange you're on. You don't need to take them out of the exchange to stake them. So I would do that personally, and I have done that. Funnily enough, I have done that with Matic. My own Matic is staked on an exchange, and I think I'm currently getting nearly 4% on my Matic. That's how I do it. It's on an exchange. In my opinion, it's safe. I have all the security systems in place. I'm not going to lose my keys. It's not worth enough to worry about if the exchange disappears, but I stake it on chain. That's the first answer to your question. So yes, you should stake it. It doesn't matter how many you've got, you should stake them, because the Matic that you have will hold value over the next 12 months and it won't erode. It might not matter over 1 year, but think about if you hold it for 5 or 6 years, that inflation is 30%. So your Matic might lose value over time, or it might stay the same. But if it stays the same, everybody else who's staking has 30% more Matic than you. That's why you stake. And the second point about Camino is I would stake directly through the main market. That is how I use Camino. And it doesn't matter how few points you get. It doesn't matter. You are contributing to their ecosystem. You should be rewarded in Q2, Q3, and Q4. So you should make your crypto work for you, but you should find the safest ways to do it. On-chain staking through the exchange you're on is the best way to stake your native tokens, in my opinion. And if you're going to use your Phantom wallet or your Soulflare wallet because you've got some USDC, then by all means, go and try Camino Finance, or go and look at DeFi Llama and find, which DEX should I be using, or which aggregator, or which money market I should be using. There's loads of them out there. Go and look for the biggest ones with the safest possible stakes. That's what I would do. So that hopefully answers both of your questions. Anybody that has questions, you are more than entitled to email me, and I will either answer them via email or I will answer them on the stream. But that is the end of the show. We are, 12:04. Now, we are streaming again in 2 hours' time. We are going to do a project review of a token called R Games, which I will show you very quickly if it comes up. You never know. I hadn't planned any of this. I think it's this one, which is an esports and competitive racing game. When it lets me in. There we go. It is a little bit slow. But it does work. I occasionally. Anyway, there we go. Okay, so we're going to be reviewing this game in about 2 hours' time. So make sure to check the calendar for this event. We're going to spend an hour. We're going to go through the project. We're going to go through the roadmap, which is down here. We're going to go through the team, some of the members of the team anyway. We're going to go through the tokenomics of the project, and we're going to review it. We are not saying that you should go out and buy our games tokens or anything like that. We're just going to review the project and see what we think of it. We reviewed, I think it was Pigcoin we reviewed on Saturday. We're going to review this today. We're going to give you our honest opinion, as we always do. In fact, if you look up here, the token doesn't go live for 4 more days. So we're going to review the token before it goes live. So make sure to check that out. Also, don't forget, I am back tomorrow and back on Saturday at 11 a.m. We stream 6 days a week at 11 a.m. We stream twice a week at 9 or 8 p.m. where we do live trading with Brogan. That's starting to become quite popular, which is good to see. We had just under 10,000 people watch him last night, which I think is a record for the Wednesday night streams. So make sure to check us out. Follow us, subscribe us, help us get that bottom left-hand corner number to 200,000 as soon as possible. It really will help us out. Thank you to everybody in chat who has been contributing. Thank you to the person who should remain nameless for the email. I hope that answers your questions. And until, well, in 2 hours, in 2 hours, I will be speaking to you again, but this time I will be joined by Brogan. So take care. There's a tight turnaround. I'm going to go and set up the stream for 2 p.m. Thanks, Kishan. Thanks, Fran. Thanks, Mag. Have a great day.